This is Brad Matheny. Today is the 30th of March, Sunday, and this is a special update video, particularly to my friend over here, Lucky264. Yep, today is your day, buddy. You've been very active, let's say, with some very decent questions, and this was my Friday review, but here you have this question, just comparing the 2018 timeframe with the 200 EMA visited 2 times, then dropped heavily, approximately 10%. What if this holds above 550, 555, then revisit 557? Okay, let me explain to you kind of where we're at related to this question. And this is a very good question because it comes down to the excess phase peak pattern, and this is weekly. I'm going to go in here to daily, and we'll shrink it down a little bit. And I want you to be aware of a couple of things. So I'm going to go through a lot of data here to show you kind of where we're at. Okay. In my opinion, this excess phase peak pattern breakdown of this flag low, remember, talked to you guys a lot about the excess phase peak pattern and how the excess phase peak pattern is the core construct of all price activity. There's actually one other pattern that I've been working on that I believe is going to be even equally as powerful as this excess phase peak. And ultimately, if we do get the breakdown, which is D, then we will end up looking for the ultimate low potentially down here. Now, there's two things that I want you to be aware of. So this was my original drawing, looking for the height of this flag. Remember, everything was done on Fibonacci theory, the concept that I'm going to do them in blue. So here we go. That if we have this low, this move from a peak level here, the flag high to the flag low, if we then duplicate that into a breakdown, we're going to end up here. This is a 100% measured move, meaning we'll be down at the 536 level, 535 level. If we then duplicate that same 100% move down below, we're going to be moving down here to this 495, 496 level. These little blue lines represent 100% measured move, meaning this range is duplicated in this range, is duplicated in this range. This happens all the time in the markets, guys. And again, you need to be aware that each one of these can be a Fibonacci level. These are Fibonacci levels. So pay attention to these levels right over here. I'll spread them out. These are my levels. In other words, these are the ones that I like to watch. So you have 25, 382, 0.5, 0.618, 0.764, and 0.97, and then 1. So any one of these are valid, in my opinion. And again, guys, there is another one back down over here at basically 0.37, roughly, 0.334. Very tight. That would be a double bottoming type of scenario. But again, where you're talking about here, let's spread this out, drag this down. And the question again was, with the 2018 timeframe, 200 EMA visited 2 times, then dropped heavily, approximately 10%. What if this holds above 555, then revisits 575? So what he's suggesting is if we hold above 555 here early this week, then revisit the 575 level over here, okay, that would essentially, and I'll draw it. Let's see if I draw it in a heavy, I'll draw his example as a heavy recovery. Assume we move up and then we move down like this. So if this is his example, then take a look at this, guys, from the flag low to the flag breakdown. This is the flag low right here to the projected breakdown level here, what we're looking at is we're looking at a bit of a rolling in trend holding above the 618 and 382 level. That's this rectangle right here. Now be aware that the 382, 618 level should be intermediate support, meaning if we stay above this level, then we have a chance of moving back up to this level. So basically, anything above this up to that upper level, in my opinion, is generally bullish. Meaning, if we get above this 559.60 level, then we're probably going to try to come back up to this 565 or 573 or 574 level, maybe even higher. But if we get below this 618 level down here, this 382 level, then we're going to move down to that lower level. Again, 100% measured move. So if we hold above 575 or 555 and we roll upward to 575, absolutely fine. Okay, it's absolutely fine. Still reinforces the 575 flag low over here, suggesting this is the base, the bottom, moving up into our trend. In fact, looks like I kind of need to move this up a little bit to there. And I need to move this up a little. Oops, not that. I'll have to get that little red line back there. Move it up. There we go. So move it right up to there. And so again, no harm, no foul. Really, no harm, no foul. Now, let's go take a look at the 2018 low. Okay, auto scale. 2018. There's 2018. Don't know exactly where you're talking about. Maybe over here. Let me add an EMA. Exponential moving average. And we'll set it to 200. So right here. This has got to be where you're talking about. And again, this was, remember, the Fed moved. This is what actually happened here was the Fed raised interest rates. I think it was 2.5%, something like that is a big move, or up to 2.5%. Let me come in here and add Fed funds rate and effective Fed funds rate. Okay, let me get rid of that. So what happened here is the Fed was raising rates, and you can see that we had moved into this Fed fund rate area here. Regular scale. And this is what caused this market to collapse. And then we ended up moving into a weaker Fed funds rate back over here. But this was basically a big collapse based on this rising of Fed funds rates. Now, technically, what caused the move doesn't matter. Let's look at it from a technical standpoint. And you can see here that it bounced, bounced, bounced. And so now we take a look at this and we really, you almost have, and you have a bit of a failing move here, but, you can see, and this is a broad interpretation of a peak, a floating down, a rally. We flag out of it. We break down into that flag low, move here. So we roll into that flag low and then get into this deep low here. Now, ultimately, you can also kind of see, a rolling type of a trend here, up a little flagging, a breakdown into consolidation right here, very clear breakdown into consolidation, and then an ultimate low setting up over here. Okay. So, I mean, I can see the excess phase peak pattern here. The second one, because of the big one, because of this rally and then rejection, takes a little interpretation in the sense that yeah, you could call it an invalidated excess phase peak moving down into consolidation. We never really get below, this low level. We move into this consolidation phase, which is why I had to look for another one over here. And a little tiny one right here sets up into this big broad consolidation and sets up this ultimate low. But again, where we're at and what you're talking about, Lucky, is you're talking about this rolling trend here before we get the breakdown. And that could easily happen back over here in our current setup. We could easily move into a sideways consolidated trend, kind of like you suggested, potentially moving into a sideways pattern like you suggested here before potentially breaking downward. And that is the consolidation pattern. So where we're looking for the consolidation low, and again, I want you to understand that get rid of this, get rid of this. Given my interpretation, I think the consolidation low is going to target down off this level, this 535 level. And again, let me explain the reason for this. If this is a big breakdown wave, and we can kind of clearly see an A, B, C, D, E kind of a breakdown right there. Can you see that big purple A, B, C, D, E? Now, what would qualify this is that C has to be bigger than A. So what I would do, Lucky, is I would come up to this peak and come down to this low and turn around and basically now I use these rejection points. To me, they're more valid. So there's my range. And now I'm going to spread this out so you can see. Oh, no, I want that back. Okay. So there's my rejection point for A. That's my A move, right down to there. From up here, right down to there. Now, this B move down into this area has to be lower, has to be bigger than this. Or, sorry, C. C cannot be smaller than A. So if this is A into here, and this is B into here, then you can see where we're at. So see, A doesn't qualify like this. A has to then qualify like this, which then puts us into this type of a move here, moving down to basically this low. That becomes our C, and then this becomes our D or E. So here we have our A move down to this low and a little B move up to here. Oops. And a little C move down to this low. And a little D move up to this high. And the E move down to this low. So that qualifies. I'm happy with that because C is now the broadest wave and D is bigger than A, but not quite as big as C. Okay, great. But this now represents wave A. So this A, B, C, D, E gives us wave A. C must be bigger than A. So now remember, if this is A and this is the end of A, giving us our pullback. I'll make this a bright red color. And so now C must be bigger than A. If this is our high and we move into the C, that means we're talking a 5 13, 514. So I'm going to put that right over here. Let's call it 512 to 515 low. And that now blows out my excess phase peak consolidation level. Okay. That would mean that if we consolidated in this area, we now have a move ultimately down in this area. And what I would do is I would copy this level and drag it down to about there and try to make it about 1.5 times the size. And ultimately, that's where this line is. Ultimately, I see the ultimate low for the markets down in this 490, 500, 485 area. So again, if we roll into this consolidation low, that would be fine. That would be essentially a sideways. You can already see a bit of an A, B, C move here. If we were to move down here and stay away from this high, we would be rolling into a extended consolidation like this. A, B, C, D, E kind of a way, where you would literally have an A, B, C making up one. So this would be Roman numeral 1, Roman numeral 2, Roman numeral 3, Roman numeral 4, and Roman numeral 5. So now, if this then is the end of wave C, potentially down in this area, then we would be looking at a potential pause into a pullback and then potentially moving down into a wave 3. So this would be A, B, C, D, E. If that second downward trend continues, understand that there's no guarantee that we're going to get these last two waves. In my opinion, it all depends on what happens moving out over here as to whether or not we get this or not. And my current opinion is that we are going to get from this low, we're going to get rejection out in June, July, and October and start to rally. That's my current opinion. I think we just get an A, B, C move down. Now, why am I believing that we're only going to get an A, B, C move down? And that is because unless we get below this 485, call it 475, 485 area, which is right here, call it 470, 480. Unless we get below that area, I'm pretty confident that find a decent color. There we go. I'm pretty confident that this 50, 60 right here, 50, 0.50 to 0.618 level is going to act as moderate support. As I mentioned to you before, if we get below that 618 level right here, essentially this level here, then yeah, we have a downside risk, a much greater downside risk right here if we get below this range right here. Basically, call it 480, 475, 480. So below 475, 480, we have a very solid downside risk. And then what we would be doing, guys, is we would be looking to try to move down into this area, this 618 area, which is 453 right here. That would be our next support area, our critical support area. And if we can't hold at that, we're looking at coming all the way back down to these lows, 2022 lows. But again, I've gone through the wave count down here. Now, real quickly, before I run out of time, I want you to understand that I believe this is the end of a wave four. Sorry, wave three to the upside. This is a wave four low. And I believe that we are in a wave five. So if I believe I'm in a wave five, and this is wave one to the upside, wave two, wave three, wave four, wave five, potentially. And of course, that didn't work out too well trying to draw up near that top. Understand that what you're looking at here, I keep telling you guys, the markets are going to double. I've said it a bunch of times. A, B, C. C's got to be bigger than A. Come over here. D, E. And then that puts us right around the topping pattern where we'll come back down. And again, this is still potentially wave five, depending on how far we pull back and correct. So you've got a tremendous opportunity right now. And I keep telling you guys, you go back, look at my videos, look on TradingView, go all the way back. You'll see videos about, I believe the markets are going to double in the next 3 to 5 years. I've told you that gold is going to go up to 12, 13,000. Silver is going to go up to 120, maybe a whole lot more. And that this is the biggest opportunity of your lifetime. That's why I'm telling you this. It's the biggest opportunity of your life. You realize that it's taken, decades for the markets to double or triple in the past. I'm telling you it's going to double or triple in the next 5 or 6 years. And you're going to be, well, Brad, you'll come up to me over here and go, well, Brad, what do I do? Well, you missed the big opportunity. Now you got to catch these big opportunities on the downside and the correction. And I may not be here forever. So take advantage of what I'm trying to share with you right now. You've got the biggest opportunity of your life sitting in front of you in the next 4, 5, 6 years. And if you like what I do, you think I'm of value, then follow me. Follow my research. Pay attention to what I do. I'm not 100%, but I'm going to tell you right now, if I am correct and we get to this point, you're going to watch gold and silver move up by more than, silver's going to move up by 5, 6, 700% or more. Actually, 1100%. And gold's going to go up by 5, 6, 700%. The markets are going to go up, tremendously. This next move is $120 move, if I'm right, up 568 points. Then the second move, potentially off this low, and I tend to draw things pretty well, is another 570 points. Gee, imagine that. 100% move and up another 71%. And then we're going to move into potentially a wave B, a very big wave B pullback. And this could be tremendous because if this is a wave B pullback, guess what? Wave C is going to look like this. Wave C is going to be up, pause, up, pause, up. And yeah, then you're going to be coming to me going, Brad, what the heck? Yeah, and this has got to go up a little more, right about there. So imagine we're at 555 now, and I'm telling you, we could be up at 3,800 by about 2035, 2036, about 10 years from now. How about that? That's a 720% move. What would you do if I told you that in the next 10 years, the markets could move up 700%? You think I'm crazy? Well, watch gold and silver, guys. Okay. All right. So I'm going to zoom back in here. I'm running out of time. Just pay attention to where we're at. This is a wave B pullback. So we're basically in a wave B pullback. This was A. We're looking to go into C, which should shoot straight up. And that's why I think we're going to have to come down and find this 475, 480 low, and then rip higher. All right, guys. Have a good weekend. Talk to you later.